So grab a pen and a piece of paper. These are the 3 steps you want to take to make money trading, day trading a stock. Now, we call these charmer trades. Okay, so what we do is every morning on our virtual desk, we identify a handful of stocks that we want to day trade. Okay. Once they're identified, and they could be 10, could be 15 names we're looking at, we then look for a specific ARMR algo setup. When we get that buy signal, we put money to work. Read and react. That's what we're doing. And maybe we could look at a chart here. I want to share with you step by step how to maximize your profits through this hack when you're day trading. Okay. Let's take a look at a day trade on our desk. You know what? Why don't we map it out together? Let's start with Bed Bath & Beyond. All right. All right. So grab a pen and a piece of paper. These are the 3 steps you want to take to make money trading, day trading a stock. Now, we call these charmer trades. Okay. So what we do is every morning on our virtual desk, we identify a handful of stocks that we want to day trade. Okay. Once they're identified, and they could be 10, could be 15 names we're looking at, we then look for a specific ARMR algo setup. When we get that buy signal, we put money to work. Now I'm going to walk you through, and we're doing this live on the desk, by the way. Okay. So as it's happening, we're watching together. We're sharing information together. Don't forget, guys, this is the fun thing. We're on a desk like this. It's just virtual. And it's all over the world. We've got ARMR insiders in, I think it's like 32 different countries all around the world. All right. So we're all working together. All right. And what we're doing is watching different stocks, and then we share in the Slack room trades that we see. I share these screens and the algos, and we start trading together. So these are the 3 steps to take to maximize your profit. I call these, profit maximization hacks that anybody can do. Ready? Pen, piece of paper. Here we go. First things first, let's set it up for you. You're looking at an day chart. So this is a 3-minute bar chart. Each bar is 3 minutes. Red bars down, blue bars up. All the lines on the screen are the ARMR algorithm we call the price movement profiler, the PMP. So the ARMR PMP uses as its core the VWAP, volume weighted average price. Okay. Fibonacci extensions above and below opening ranges, and average true ranges above and below. Average true range high, average true range low. We also use standard deviations 1, 2, and 3 above the VWAP. Now, I call these are all ARMR VWAP, ARMR ATR. That's because we took off-the-shelf VWAP and we infuse it with a volatility component, top day and multi-day. We do that with all of our tools that are inside the PMP. So they're things we take off the shelf, TradeStation, or you could probably use Thinkorswim or whatever. And then we go into the code and we've rewritten it so we think it makes it a little more dynamic. Okay. And so this is what we're looking for. When we get, and I'll do the white box for you first. So this is on our list. First thing in the morning on the desk, the virtual desk, we got a list of names we're looking for. Stocks start trading. And this is the setup that we wanted to find first. All right. So the ARMR algo tells us right here, this is a stock we need to look to trade. Okay. So on our virtual desk in the Slack room, I'm going to type in, I'm going to talk it out. I'm going to say, okay, out of the 10 or 15 names we're looking at, BBBY just showed up as a target for us to trade. All right. Now let's start watching it. What price does it have to hit for us to get long? Okay. So right here is the target bar to get long. So this is a 3-minute bar chart. And this bar right here is where we get long, right in here, those 3 bars. But, to be this bar right here in the middle is where we get long. All right. Now it starts to rip higher. This is a day trade, right? We pop on it. So here are the things I want you to know. Write these down. These are the stops that we use Anybody can use them, and I think it will, potentially enhance the way you day trade. I'm going to caveat this before I lay it out for you, okay? And of course, don't forget, if you find this interesting, helpful, hit the like button. Go ahead and share this video with your friends who day trade that could use this information. Here it comes. The caveat is the way I trade may be different than you. We all look for more or less gains on a trade. I can't tell you how to do that. I know some guys that sell everything on the first pop. Good for them. The way I look at it statistically, I need to capture as much as I can on my successful trades to pay for my losing trades. Nothing's going to be 100%, right? And quite frankly, if I could create a strategy that's 50-50, but my gains skyrocket and my losses are tiny, I'm going to make a fortune. So I don't even have to be right 7 or 8 times out of 10, right? I could be right 3 or 4 times out of 10 if I'm maximizing my gains and minimizing my losses. This is something people totally miss when they try to write an algo or they try to come up with a trading strategy. You think you have to be right 8 or 9 times out of 10, and you really don't. You just have to manage your risk correctly and manage your success correctly. So these right here are the hacks that I use, the profit maximization hacks I use to day trade. The first one you want to know for my strategy, for the ARMR strategy, is the low of the bar we're buying is the first stop. So we're buying this bar right here. And when we look at a couple charts today, I want you to realize they never challenge the low of the trigger bar. So to have a stop down here would be a stop that's way too big. You're going to lose too much money for no reason because the ones that work never challenge the low of the trigger bar. Now, when it starts to rip higher, and here's the first thing I would share with you. The first pop off of the entry point. I mean, the first pop. Sometimes I use a dollar amount. I look at how much I'm up. So I can't give you the dollar amount because it won't make sense. I trade a different size than you might trade. But whatever that is, you'll know it when you see it. The asset pops enough to hit your first target of success. Book some profit. Don't be greedy. The first thing you have to do when you're day trading is get off the emotional roller coaster. So when it pops, you book a profit. And depending on how big the pop is, you raise the stop to break even. That's debatable because it depends on how high the pop is. So sometimes I just leave the stop where it is, but I've booked anywhere between 20 and 30% of my gains on the first pop. Okay. I put big positions on first. So when it pops, I'm booking gains to bring me down to what would be an average size. That's my theory. Right? So maybe I buy 20 to 30% more than I would. Or I could buy 50% more than I would on an average trade. And when it pops, sell half of it. Then I'm carrying an average position size the rest of the way, and I've cauterized my risk, and I no longer have emotion. It goes back to where I bought it, or it hits the original stop. I break even. Okay, worst case scenario, I break even, and I go on to the next trade. Skyrockets, I keep making a lot of money. So step one, get off the emotional roller coaster by booking a profit on the initial pop. Step two, okay? So somewhere in here, it pops here, somewhere in here, I'm booking some gain right there. Just taking some money off the table. Now I have no emotion whatsoever. I can just trade. There's no fear of losing money. I'm going to see how much money I can make now, right? The next thing I do is I look for the low of 2 bars ago to be violated. Each bar is 3 minutes. Obviously, this works on a 3-minute chart. So if you're using minute charts, it could be different. You have to see. But for a 3-minute chart, and the way I trade, the second thing I do is I follow the stock up as it's skyrocketing. As long as it stays above the low of 2 bars ago, which is 6 minutes, I don't touch it. I let it fluctuate, let it run. When it takes out the low at 2 bars ago, I book some more profit. So look, it goes up at a straight line. doesn't take out the low of 2 bars ago until that down bar right there. So that down bar right there, and by the way, I would be booking profits not at the end of the bar, but as it's taking out the low of 2 bars ago. So I'm booking profits right in here. Okay? At this stage, when I book profits on that type of an exit, I'm going to raise my stop somewhere above break even on the rest of the trade. I don't want my stop to be too tight because I want to let it run, but I'm going to raise my stop. And that brings me to my next and last piece of information for you. Where would I raise my stop to when an asset's running? I look for the big expansion bar on volume, a bar bigger than all others. So I'm in the trade here. It goes higher. I book some profit. It rips higher. This bar is the big expansion bar, right? It's bigger than every other bar since I entered. I book some profits when we take out the low at 2 bars ago, and I raise my stop to the low of the big expansion bar. The theory being that big expansion bar is often the blow off top that ran through stops and exhausted the buying. So my stop will go right in here. Okay? And you can see, by the way, after the low of the 2 bars ago was triggered, this trade's basically over. It goes a little higher, comes down, the stop is here, we leave it alone, right? It pops back up here and it fails, comes back down. The ultimate stop would be in here. Now, I might be out of this trade before I wait for it to come all the way down here. There's other reasons I would do it, right? So it runs up again and takes out the low of 2 bars ago, and I book profits again. Every time a screamer takes out the low of 2 bars ago, I pare the position back and book profits. Let's look at this trade. This is a new issue. So I'm going to look at this new issue only to share with you these rules work without any algorithm, okay? You don't need the ARMR PMP for these rules. So I'm going to walk you through this idea. Again, if you enjoyed this conversation, go ahead and hit the like button, share this video with people you think would be good candidates to join us as portfolio managers on the virtual desk, okay? But I want to walk you through a chart with no PMP. The PMP only works if I have enough data. So a new issue PMP doesn't print, okay? And I usually don't trade new issues for that reason. I'm an old goalie, all right? I'm an ice hockey goalie. I played my whole life. And so I just always like to tap my post to make sure I'm in the right position. That's what the PMP is to me. So if I trade a new issue with no PMP, I don't know. I feel like I'm behind the net as the play's coming down the ice. So anyway, but I wanted to show you how this works, even though there's no PMP on here. The trade breaks out right here. I want you to see how the asset doesn't really take out the low of 2 bars ago until that big down bar. So you'd be in right here. Here's a tight formation. This would be, if we were just looking at tight formations, okay, you would see that the tight formations here, the breakout of the formations, the buy trigger. All right, that's if you're trading without an algo. And you say, okay, I'm just looking at charts, and there's the buy trigger. That's pretty obvious. Okay, and you could do this without an algo. The algo for me is my touchstone, and it increases my probability of success. Okay, so we look at 10 or 15 names every morning, and I know some ARMR insiders are out there trading all of them. I don't do that. I try to focus, and I share with you guys as it's happening. Here are the 10 names we started the day looking at. Here are the 2 that set up ARMR algo entry points. And so while there's a real debate, I could trade them all and my success would go down. I would get somewhere between 3 and 4 out of 10 right. But if I trade them correctly with the right risk management, I'd make money. Or I could use the ARMR algo and increase my success rate somewhere over 50%. Right now it's running hot because we had a big rip in the market. So the success rate is probably 7 out of 10, but that's not normal. I'm just targeting probably 5 out of 10 when you're trading like this. Okay. And we'll just, I'll share the data with you as the months go on. So if it stays at a high level, that would be great. But I'm just saying, if we're just right half the time and we trade successfully using these tools to manage risk and manage success, we're going to make a lot of money. Okay. So this, just look how this works. There's your entry point. It starts to run. Even here, it doesn't take out that little teeny tail. You have to, this is a good time to mention this. I know there was one insider asking me, hey, it looked like the stock went down to a stop. Not this one, but a different trade. How did you make money on that? That was a great question. I share stops with you in the room as it's happening. And in real time as I'm trading, I'm watching the behavior as I get to the stop. It's not always a hard stop, like the minute it hits the price, I'm out. Very often it hits the price, reverses, and goes back up. So sometimes I exit and put the trade right back on. If it hits the stop and immediately goes up, I put the trade back on. And sometimes, and here's like a bonus thought for you guys, put it on your own radar, think about it, look at your own trades and see if this works. Sometimes I get stopped out and it reverses the next bar. I'll put a bigger position size on as it rips higher again. The very fact that I got stopped and it reverses tells me that I'm not the only guy that had a stop there and it got hunted. And when it reverses, goes the other way, the rip's about to get even bigger. So I'll put the trade right back on. So when I share in the room, the virtual trading desk with you, what my stops are, they're a basic guide of where I'm going to start managing my risk, right? And when it gets there, I have to make decisions on the fly. And either I get out immediately, I'll give it an extra bar sometimes, or sometimes I get out and get back in. It's a nuance. You have to get used to it and trade what feels comfortable to you, okay? But anyway, so here's the rip higher. This would be the first bar you would exit. Well, by the way, so this is the move right here. This bar right here is where I'd book some profits on the trade, right? It pops up. Here's a big expansion bar. Thank you. I've made some money. I'm not going to lose any money now. Now I'm just managing my success. So there's no more emotional roller coaster. Here, I'm going to book more profits as we took out the low at 2 bars ago. Okay. But it doesn't come anywhere close to my stop. So I let it keep running. Okay. Maybe I'd book a little bit more right in here as it takes out the low of this little consolidation. But again, it's not hitting a stop. So at this point, my stop will be raised to here. So once I get a big expansion bar and another big bar with a big tail like that, that tells me the buying could be over. And so I'd put my stop right here. I'd book profits twice on my rule when it takes out the low at 2 bars ago. So I keep cutting the position down. And I cut the position down until I get to a point where I'm about 50% booked and I'm still 50% long. And the 50% that I have left, I usually just follow it up with a trailed stop. And so I would trail this thing up, all the way. This expansion bar here would be the next level that I'd raise my stop to. It would rip, 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 okay? And at some point in here, like this expansion bar here would be the next level I'd raise the stop to, and I'd be out of this trade right here, capturing almost the entire move. So those are 3 tools you can use to enhance your day trading. These are like day trading hacks for me. First thing, the low of the bar you buy is the stop. Second thing, when it pops initially, book some profits to get off of the roller coaster of emotions. You have no fear now. You book some gains. Goes back to your stop. You're out. You haven't lost money. Probably break-even trade. It explodes higher. If it takes out the low of 6 minutes ago, 2 bars ago, you book more profits. You raise the stop to the low of each major expansion bar, in case that's the blow off top. When it takes out the low of the big expansion bar, the move's usually over. I hope that helps you.